Stocks dip as a US tariff kicks in and US-China trade war escalates. IT, realty and metals are the big drags while FMCG ekes out gains. The Reserve Bank of India has cut the benchmark repo rate by 25 basis points to support growth. It also revises its stance to accommodative from neutral, signaling easing to stimulate growth. RBI marks down its growth projections for FY26 by 20 basis points to 6.5% from 6.7% in the light of global trade uncertainties. It, however, moderates its inflation expectations to 4% from 4.2% for this fiscal. RBI will release new draft rules for gold loan, but the governor clarifies that he did not indicate tighter norms, helping spooked stocks of lenders recover. The central bank is also opening a co-lending to all regulated entities and for all kinds of loans. US reciprocal tariffs kick in on April 9th with the levy of China's revised up to 104%. And while several trade partners are hopeful of striking deals with the United States to ease the levy's risk of a standoff with China rises. Hello, good afternoon. You've tuned into Business Lunch, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, and thank you so much for tuning in. Let's take a quick look at what the Indian markets are doing as of now. Nifty has seen some bit of a recovery from the day's lowest point. As of now, trading with guts of almost 0.5%. 22,400 is what it's managing to hold on to. Nifty Bank is also down 0.5% in trade, recovered from the day's lowest point. Among the sectors, FMCG as well as auto, that's managing to hold on to some bit of a gain in today's trading session. Top sectoral gainers there. FMCG up more than 1.6%, and auto is recovered from the day's low and now trading with gains of 0.5% in trade. IT is the top sectoral loser. We had a note that came in from Jefferies as well, where they've cut IT companies' targets by 5 to 35%. So keep an eye out on IT companies and where they are headed. Nifty IT as of now is down 1.8%. PSU Banks also seeing some bit of a brunt in today's trading session, down 1.8% in trade. But yes, that's what we are seeing in terms of the Indian markets. But let's look at the other global markets as well. European markets, they have opened up with cuts coming in the range of around 2 to 3% today is what we're watching out for. Whether you look at the FTSE, CAC or the DAX, all of them have opened up with some bit of a cut because of Trump's reciprocal tariffs that are taking effect today. Now, moving on to the Asian markets. On the other side, we've seen some of these Asian markets recover from the day's lowest point. So look at Hang Seng. Look at Shanghai, the Taiwan index also seeing some bit of a recovery coming in there. All these have seen a sharp recovery from the day's lowest point. US futures also are seeing a recovery following China's response to the tariffs that we're seeing. China's white paper states that US will not solve its own problems by raising tariffs and that China is willing to communicate with the United States on important issues in the economy and trade. China firmly opposes the unilateral bullying restrictive measures imposed by the United States and reiterated commitment to take measures to safeguard their legitimate rights and interests. And as this trade war tension is increasing and rising, especially between China and the United States, there are possibilities that China may hit back by selling US bonds. Prashant is joining in with us to now explain this further to us. Prashant?
Well, thanks very much for that. This is the question. Will China hit back at Trump's tariffs by pulling, as what one guest in the morning told us, the nuclear option? That is, selling US treasuries, US bonds, basically. According to many, it's the most powerful weapon in China's arsenal. I mean, it's not new. Every time there are these tensions, back in 2018 also, I remember, this was put out there. Will China dump its holdings of US bonds? So let's just quickly take a look at this, right? Will China retaliate by selling US bonds or not? Not just with words or counter tariffs, but real pain in the bond market. Now, a move like this could serve as a powerful financial market deterrent, much like weakening of the yuan's daily fixing. I mean, the last fix, not today's, but yesterday's fix showed that China is willing to tolerate lower yuan to increase the competitiveness for its goods. It will also, a move like this, when you dump bonds, yields shoot up. It will raise the cost of funding for US government and, of course, send that message that don't take our restraint for granted. such a move, and how big is China's holdings of US government bonds? Let's just take a quick look. The last number I have is this. China holds, and if you can move the graphic along, is about China's holding of US bonds is about $760 billion. That is, just pure China. There are some reports which suggest that, you have to take some proxy holdings, etc., and then it becomes over 1 trillion, but direct holding about $760 billion. This graphic is also interesting. China's ownership of US government bonds as a percentage of total foreign ownership of US treasuries is about 8.9% now. What was the peak? It was 28% in 2011. Remember, foreign investors own about 30% of the entire US debt. So, these are very large numbers, and that's the reason why this comes up off and on. Now, the point also is this. If China decides to sell, US, of course, hurts. But China also hurts, simply because it is one of the largest holders. A fire sale could devalue its own reserves. I mean, this is basically quite similar to how a large shareholder in a equity, in a company, when they sell stock, the stock can crash. Liquidity evaporates. There are not that many buyers. In this case, of course, if something like this happens, the Fed will have to step in, open up QE and suck in all these extra bonds which are coming in and hand over dollars to China. That's, of course, in the extreme kind of scenario. One line of thinking is also this. Why sell? According to the numbers that I have, 60% of foreign holdings of US government bonds are in between the 0 to 5 year tenor. So they're not very long tenure bonds. They're between 0 to 5, max 5, 60%. And I'm assuming China's numbers are also the same. Simply run these bonds down. Don't reinvest when they come up for maturity. Don't buy more. So, your exposure automatically reduces. In any case, China's reserves, the trend there has seen one clear thing. They're buying more gold and they are buying lesser and lesser US government bonds. So this has anyway been happening over the years. Now, while we're only talking about China here, the bigger longer term question is this. Will we see overall foreign demand for US treasuries also more permanently impacted, caused by all this nastiness, for the lack of a better word, on tariffs and trade? Coming back to China, the Chinese central bank, the PBOC, the People's Bank of China, has a longer-term goal which is very public. They want to diversify their reserves, move away from US dollar and reallocate into other G10 currencies. That pivot also now makes more fundamental sense because, the rate differential between US and G10 countries has been narrowing. So there is a fundamental aspect to that as well, which we need to take into account. Now, that's basically what we have. We will have to watch this space closely. China doesn't have to sell substantial portion of US bonds. A small but chunky sale could make the point to Trump and his advisors that we will match you in escalating this trade war step by step. Back to you.
Okay, Prashant, thank you so much for that. An interesting update coming in there. One stock I do want to highlight right now is Muthoot Finance. Let's pull that up because that's recovered from the day's lowest point after, on the loan guidelines coming in and more clarity coming in that, yes, he's not said that there would be negative comments or tightening in terms of those gold loans. So because of that government, RBI governor's commentary coming in on that front, we have seen that recovery coming in from the day's lowest point as of now for Muthoot Finance. So interesting to watch out for that one. And US futures, let's talk about that as well. US futures, that is seen a bit of a recovery coming in this trading session as well. As of now, what we're seeing, look at the Dow futures. 3/10, 4/10 of an uptake, S&P futures, all of them are trading with gains, right? So futures, US futures indicating that bit of a positive start coming in there, and that's interesting to watch out for. Now, obviously, that commentary that's coming from China and which we're talking about as well is something that's a factor that's coming into play as well. So yes, that's what we're watching out for in today's trading session. All these US futures indices are seeing a recovery. We're seeing that some bit of a recovery came in for the Indian market as well. But that's all the time we have on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Up next, your Midcap Radar.